guys, welcome back to another video. Today I want to go over just a few pointers that I got going on. As you guys know, I'm in a challenge with the funderpro right now. I'm a little bit in profits, but I'm basically just focusing on the swing trade aspect of this particular trade. I'm in on NAS 100, and I just wanted to go over a few things really quickly. Now, I do apologize for I never actually start my videos on time. Usually I'm getting up late and I'm getting to the screen, jumping into the trade based on my quick analysis and stuff like that, and then I have to hurry up and kind of get my day started with my business. So I never get to actually shoot the first portions of me getting into the trade, but I'm working on starting that so that I can just be prepared to have that portion of me entering the trade. And then I'm also working on being able to record the whole play out, because it's a little complicated when you have a lot going on and if your screen time isn't that long. So diving right into this, right now I'm on the Hakanashi candles. If you're not familiar with Hakanashi candles, please go back and check my Hakanashi candle video and basically get a little quick understanding of how they actually work. If you do not know what these lines are that are represented on the screen, you can go back to my moving averages video and you can check out the moving averages that I use, and also the in-depth video on how exactly I use the lower moving averages. So earlier on in the day, I took a position that brought my balance up to 354. Well, really, it was about $200 that I made. So typically, I'll catch the 20 MA halt and run. I like to call this whale mouth because it always kind of reminds me of a whale. Like about to draw a whale here. Whale eyes. And it just, I don't know, it always reminds me of a whale for some reason. So yeah, so that's always, or fish mouth, whatever. That's where I usually see my 20 MA halt, and I like to get my positions in sort of somewhere in this area right here. Like if I could get my position where the stock has sold off, it's sold off, it's sold off, and now that it's completely sold off and it's bounced, it falls, but then it finds itself here. So anywhere in this zone is a good place for you to pick up a position and kind of hold it into the 200. Typically I'll hold for the retracement, and if I hold for this retracement, I usually like to hold when I'm not holding too much, so I don't see a major drawback in that area. But if you want, sometimes you can hold with the original trade, and then as it comes back into this area, take another trade. But typically, just as unforgiving these markets have been, I'd rather take profits here and leave a little bit on the table, and then enter another trade here for the rest of the upside. And that's typically what I normally do. But today, I got in very early, somewhere here in the 20 MA halt, and then I rode that into the 200. I kind of missed out on this wicked out portion of that right there, and so coming back off of the sell-off, I took profits, and the other one I held, I missed this as well because I was out in Alex business, and so when I got back, it was like right at the 200 wicking out. So I basically ended that trade, took another position where I ended up canceling here on this wicking out and for a small profit, and then I entered again where you see that green line right there. So now I'm just really holding for the rest of the continuation back to the highs that you can see right here, represented by that gray line, and just trying to get the full leg of the play. So by the leg, I mean I'm trying to get the full run and then pennant, then a run, then pennant, then a run, pennant. And that's typically how the market behaves. You can see it in other aspects here. I have to run, pennant out, run, pennant down, run, pennant down. Let me do that in a different color, so you can kind of see the concept of that. You see how it runs here, bounces, runs down, bounces, runs down, and the bounce ends up being higher than the previous high. So now we're getting to that phase where you see how it turns around, because the pattern is, as long as this is at least halfway, it'll keep going back down. Halfway, lower low. Just change these colors here. Let's do white. So as you can see, the sell-off happens, the bounce, and it's at its halfway mark. So being that it's at the halfway mark, the downside continues. Comes back, halfway mark, the downside continues. But when it rallies off this one, it comes all the way back to this height, as represented by the purple area. So now you know that, okay, it's relatively back to that, which is reversal. So after the runoff, which is what I would expect coming out of where my stock is now, somewhere to Monday, Tuesday, Wednesday, and then a continuation. So I just wanted to show you guys that because it's a pretty decent strategy. As you can see, I have the 200 coming in. So let me clear this. Let's just get a real clean understanding. That's exactly what I have going on here. The technical analysis traders. So I'm sure you guys look at it. I don't even really know, because I don't typically use technical analysis in the same way everyone else does. But I would, I guess, draw a channel up and say, yes. So let's start us a little channel here. Set this up. There we are. And so right here, to me, you can almost automatically see the breakout. So you have all this, the return, the bounce, the return, bounce, the return, the bounce. But as you can see, this bounce in particular has actually broken the actual channel. So you could expect some downside here before a bounce off of that to the upside, maybe kind of just channel out that way. That's to be expected, but not guaranteed. But the way we trade, we like to put that 200 moving average on the chart. And that 200 moving average shows us exactly where the channel. So you actually have the breakdown here where prices slammed back into the 200 moving average zone. So they brought prices all the way back into the average zone. Then it kind of rallied off of that, trying to continue. But then that rally didn't make it very far to a new high, so it continued down. But it kept going back to the same reference point. And that's something that you could kind of gauge in the future. If you look at that point that it kept returning to, that whole area right there is where it wanted to zone. So I would keep that in mind in the future. That area is serving as a major support. So now that we got that labeled up as a major support zone here, then you're looking at your 200, you're seeing your prices kind of getting ready to bounce off your 200, you add in your 20 moving average, and now you kind of see that 20 getting ready to cross that 200 MA. And so you're in pretty much a really bullish trend here. And with the Hakanashi strategy, basically we're looking for an exit on a doji candle. So we'll hold through all this push here, and we'll wait for basically one of these candles to appear right here. So that doji candle is what we'll be expecting somewhere in here in this zone, and we'll be looking to get out the position at that point. So guys, I'll be coming back to show you the play out of this after the weekend. But I just kind of wanted to show you the pre-setup, and then I'll show you part 2 in the coming days. So stay tuned, stay with me. Let's be on this journey together. Remember, if you want to ever holler at me, man, jump into the comment box or into the community. Like, subscribe, share it with your peoples. Let's try to beat this together. See you in a couple days.
Humbug.